Okay, so first of all, before I start this, let me just say that, again, my name is Crystal, and I am a health and life insurance broker. I've been doing this for about 12 years. We've been in business for over 20 years. I personally am certified and licensed to sell individual health insurance, group health insurance, life insurance of all types of, for all different types of needs. So with that, I just like to share this little 2-minute snippet on the quality of life insurance. Today, again, life insurance you don't have to die to use. So I want to share that with you today. So let's see if it will work. Uh-oh. Now what? Okay, good.
Ask yourself, what's most important to you? Your family? Definitely. Your job? Sure. Your home? Of course. Making sure you can pay all your bills? Without a doubt. Everyone agrees that providing for your family is important. You need to support your family. But you also want to be able to provide financial security for them if you should die too soon or if you should suffer a serious illness. AIG has developed something that allows you to do both. Quality of life insurance is modern, affordable life insurance that allows you to use your coverage in new ways. Quality of life insurance was created because we know that in addition to providing for their families in the event of premature death or a serious illness, people have other long-term financial goals. They have plans for retirement, their children's education, and for other important milestones. Quality of life insurance helps you meet the life insurance needs of your family today and may help you secure your future as well. How? Because you can receive a portion of your life insurance benefit now, before your death, if you have a qualifying critical, chronic, or terminal illness, such as a major heart attack, invasive cancer, or a stroke. That's what makes quality of life insurance so attractive. It really is life insurance you don't have to die to use. And how you use the money is entirely up to you. With quality of life insurance, it's your money, your insurance, your choice.
Okay, so it worked! That is success to me. I wish we had better volume, and I don't know how to solve that riddle, but we'll work on that. Okay, so you can turn the lights back up, thank you. And did everybody get one of those sheets that I handed out? Did everybody get one? Okay, so did I keep one for me? No? No. Okay, they were coming around, so can I take this from you? I need at least one of them so we can talk about it. Okay. So I'm going to go up here to the podium so that I can hopefully can hear me better. So quality of life insurance. Life insurance today doesn't have to be just life insurance. It can be quality of life insurance. And what that really means is they say statistically 2 out of 3 people are going to have some kind of an illness, okay, in their lifetime, critical illness. So what is the critical illness? The critical illness would be a heart attack, cancer, stroke, those kinds of illnesses. Now, if that's true, when that happens, if you're one of the statistics and it happens to you, how are you going to pay your bills, your mortgage, your car payments, your food if you can't work? Some of you might have a nest egg that you can rely upon, but maybe you don't want to use that nest egg, especially if it happens to you at 40 years old or 50 years old. It's one thing if it happens to you at 80 and you're retired and you're living on your nest egg. Or maybe you don't even have anything set aside and now you have cancer, heart attack, stroke, and you're faced with some really difficult decisions. So the paper that I handed out to you, it says, here it says, you may be at higher risk for a serious illness than you think. And it says on here, every 34 seconds an American suffers from a coronary event. Every 40 seconds an American has a stroke. Every 68 seconds someone develops Alzheimer's. 75% of heart attack victims survive for 3 years, and so on. So you can see we're at risk, great risk. And again, if you choose to just buy regular life insurance, When you die, that will take care of your family. That's a good thing. You know, your family will benefit from that. But what happens if you don't die? We call it half dying. Really, you're half dying. Maybe you can't even go back to work. Maybe you go back to work in 6 months or a year. What are you going to do if you can't work, if you're the primary breadwinner? The problem with most other policies is you have a 90-day wait period, and then you might get like a disability policy, and then maybe you'll get 60% of your income. Can you live on 60% today if that's what's happened to you? You would have to adjust your lifestyle pretty significantly if that happened. So what this policy can do for you is you can use it as a life policy, but you also have these living benefits. They call these quality of life benefits that you're able to access should you have one of these life events. Okay, so let's say you buy a $500,000 policy, and it is a term policy, meaning it's for a period of time. This policy typically goes for a maximum of 35 years depending upon your age. So what are the features of these living benefits that make this a quality of life product? If you knew you were going to die within 24 months, you could access or accelerate the benefits of that $500,000 policy. Maybe you'll get $450,000 today instead of waiting 2 years to get the death benefit for your family, and you can, one, use it for today to live on. And I don't know what the determination would be. I'm just giving an example. So I want to make that clear. I don't know what the offer is going to be. It's all based on your morbidity or how long they anticipate that you're going to live. So they have this accelerated 24-month benefit if you're terminally ill. You can accelerate those benefits and take that money early to get care, to travel, to pay your bills, to do whatever you want. Nobody's going to dictate. They're not going to just give you 60% of your income. There's no wait period. Once it's been diagnosed, the doctor sends it in. You fill out a form. You get your check. Critical illnesses, that would be, again, the cancer. It covers cancer, heart attack, stroke, invasive cancer. It covers Lou Gehrig's disease, end-stage renal disease, paralysis, organ transplants, ALS, blindness. So those are the primary critical illnesses. Those are the things that it covers in this particular policy. But it also has another unique feature called a chronic illness feature. The chronic illness covers a myriad of illnesses that are not defined. And that means, let's say you come up with Parkinson's or Alzheimer's or dementia, or you have a car accident and you can't do certain things. The trigger for chronic illness is what they call 2 daily living activities. Those are the things that are typically related to long-term care issues where you need assistance in transferring your body from one place to another. Toileting, bathing, dressing, eating, continence. Those are the typical daily living activities. If you can't do 2 of those, there's a trigger in the policy that will allow you to, again, accelerate those benefits so that you can get a lump sum payment to take care of you. So that you have, instead of getting, if you buy this is not long-term care insurance, but if you buy a long-term care policy, the difference with that is you pay the premiums. If you use it, great. If you don't use it, what happens? You don't get anything unless you have a non-forfeiture option, which you can then utilize the money you put in if you don't pay any more and just get your money out over time, should you have a claim. That's, again, should you have a claim. If you died, you don't get anything out of it. So this policy has a death benefit. So if you die, then you get the death benefit, or your family gets that. But if you live and you half die due to a critical illness or chronic illness, then you can access money out of this policy. And it does really create quality of life. Statistics say if you have a term insurance policy today, about 3% will be paid out in claims. That means 97% of you are wasting your money. You will never see $1 back. That is a bad investment as far as I'm concerned. How can you improve that ratio on your investment? Is you can purchase one of these policies that have living benefits. Now they say there's a 66% chance you're going to get money out of that policy. 2 out of 3 people file a critical illness claim in their lifetime. So that's a lot better odds. You're not just throwing that money down the drain. You may see some return on your money. Maybe you live longer and you outlive the term of the policy. That's why I always recommend you have one of these policies in addition to a policy that takes you to the end of your life, which is a universal life policy. And then there's the other policy I talked about last time about taking money from your IRA, diverting it, and buying a policy that creates tax-free income. But I can't talk about all these things all at once. But what I can do is I can meet with you, I can review what you have, I can clearly assess what you need based upon what you tell me and make a recommendation if you would like. I'd be more than happy to meet with you to do that. So if you have something that I think is of value that I think you should keep, I would suggest that too. I'm not going to have you change anything unnecessarily. So anyway, are there any questions? Ding. I guess not.
So, Crystal,
Yes.
Is this a cash value policy, like a whole life policy, and then is the distribution alone? Or
No.
is it actually a,
It's a term policy.
A term policy?
It's a term policy, and most of the time, like, depending upon the age at which you purchase it, it usually ends up taking you to between 82 and 85, which is life expectancy today for our generations. So they anticipate for the younger generation, they're going to move into their 90s based upon what they're doing in technology and science today. So, but for us, these term policies, it has no cash value. If you want a cash value policy, of course, we offer those too. And they have cash value policies.